Hi guys, welcome to Money Theory. In today's video, we're going to talk about how to store your money. This video was inspired by both the crypto crisis and also the recent regional bank crisis. The importance of knowing how to store your money is so that you can make a living. This includes paying your bills and budgeting, and also having savings for emergency. It's also important in order to plan for the future. This includes having a retirement savings, planning ahead for 30 to 50 years in the future, and also to pass some wealth on to your children. So there's a variety of choices. There's cash and cash equivalents, crypto, and also gold and precious metals. Let's start off with cash. The first part is checking and savings accounts. The benefits are that it's quick to access. This is useful because you can pay with your debit and credit card, and it's very useful to use in terms of saving for emergency. There's also usually the FDIC insurance, and the limit is $250K. You may have heard about the Silicon Valley Bank crisis and how the accounts that were millions of dollars were insured by the FDIC. However, remember that it's just an exception, not the rule. So to be safe, just think that the account is only insured up to $250K. So the cons to this is that there's minimal gains on savings. On typical savings account, it's usually about 0.1%. And because of that low gain, it consistently weakens with inflation. The next category is high-yield savings accounts. These are still relatively fast. It takes about 3 to 5 days to transfer to your checking account so that you can pay the bills. And it's also very useful for emergency savings. It's okay gains on savings at about 2%, and it's also FDIC insured. The downside is that it's still not keeping up with inflation. The next category is CDs, treasuries, and bonds. These are at a 3 to 4% yield, and it should keep up with typical inflation. It's also less volatile than stocks. The downside is that it's locking up your money for a period, like 3 months, a year, etc. And there's also risk of losing value when interest rates rise, except for CDs. And know that the longer dated bonds lose value more than the shorter dated bonds. Remember that the Silicon Valley Bank faced a crisis because it was holding most of its money in longer dated bonds. The next major category is cryptocurrency, and will also include the stable coins too. The benefits is that it can be considered a diversification from traditional investments, and there is potentially higher growth. Also, it's considered that you become your own bank if you use your own wallet, so you're independent from the traditional financial institution. The downside is that there's higher volatility and risk, and using centralized exchanges contradicts the principle of decentralized finance. Because it's also newer and less regulated, there's also more scams, and there's no FDIC insurance. There's also still relatively minimal adoption in paying for things. The two major cryptos are Bitcoin and Ethereum. They're considered the more stable crypto, but if you look at the long-term chart, it's still quite unpredictable. Next, we'll talk about the Terra lunar collapse. Stablecoins are a cryptocurrency with a value pegged to $1. So UST Terra or USDT Tether should be around $1. However, on May 9, 2022, Terra loses its $1 peg value, and its value fell to as low as 35 cents. And as of May 2023, its price is about 1 cent. You can see the long-term chart. It was originally intended to be at the value of $1 in the beginning, and then it just continued to crash. Next, we'll talk about the crypto banks. They offered a high incentive of 10% staking rewards, and that is on pace with CPI inflation. During 2022, there was high inflation fears, so a lot of people were enticed into putting most of their money into these banks. It was also considered a safe investment compared to regular crypto. As you can see on the chart on the right, you can see calculations on the interest rates. However, the money is not FDIC insured. If the exchange collapses, you lose your money. Next category is gold and precious metals, such as gold, silver, and platinum. The benefits is that it can be a diversification from traditional investments, and it can be considered an inflation hedge, but it's not entirely. There's also utility in manufacturing products, so there's some intrinsic value to it. The downside is that there is no consistent trend even if we're adjusting for inflation, and it's also less portable than digital cash. There's also storage costs, such as renting a deposit box. And like crypto, there's minimal adoption in paying for things, so you'll end up having to convert it to cash anyway. So for our closing thoughts, our recommendation is, despite the inflation risk, focus on keeping your money into your traditional currency first. Build up your emergency fund for 3 to 6 months of expenses. Unless your nation is facing a massive crisis like Turkey and Venezuela, then in that case, you would convert it to a local stable currency like dollar, Europe, or Swiss franc. Cryptocurrency is generally not recommended. Limit it to 5% of your net wealth if you're curious and you want to be experimental. And gold and other precious metals can be considered if you built up your emergency savings and some stock investments. Limit it to 15% max if you're experimental. Hi guys, I hope you enjoyed our video. If you'd like to support our channel, you can check out our Patreon or buy me a coffee. Be sure to also check out our Instagram and YouTube accounts, and to comment, like, and subscribe. Thanks for watching.